I would probably never give that like focus advice to any founder.
How do you stop yourself from being spread too thin?
We can enable all of those developers to help us uncover what is out there on the map.
What does like success mean to you, like in the next maybe 1 or 5 years?
It's not just inevitable. Like someone has to build it. If we are not going to do it, no one else will.
Is it easier after having been acquired by Stripe?
Views are personal, not investment advice.
This is Money Code. It's a show where we decode stablecoins and programmable money. I'm Chuk, Okpalugo.
And I'm Parekh. And today we're joined by Zach Abrams, co-founder and CEO of Bridge. Welcome, Zach. Zach, Stripe's annual letter just came out. It mentions that you guys grew 4x while the market grew 2x. Can you maybe break down like what's behind all the growth? And we can unpack, the future of, what's happening in the Bridge ecosystem after as well.
Yeah, I mean, last year was certainly a very, very big year for us. I mean, we closed on the Stripe acquisition on January 2nd. So right at the beginning of the year, we officially became part of Stripe. And then throughout the year, our business materially accelerated. I think a big turning point, or not a big turning point, but a big moment for us was at Stripe Sessions in what was that, March or April, where we announced, our card program with Ramp. There was a bunch of, Patrick and Will both gave like big presentations on stablecoins. And I think like we felt, not just with, our acquisition, but then also a lot of these big announcements, a shifting of where we were along the adoption curve. Like, I don't know what it feels like for other folks who've sort of been along the adoption curve. I know the AI adoption curve is like particularly crazy, but for us, it felt like we went from early adopters in 2024 to like somewhere in the middle of the adoption curve, like in like 3 or 4 months after the acquisition and a bunch of those media events. And so that really accelerated our business because it was more customers, larger customers, enterprises coming in and adopting stablecoins and showing, all those folks who were a little later on the adoption curve what is possible. And all of those things just compounded to lead to our business, growing by a few multiples in 2025.
Yeah, I totally resonate. We were working on stablecoins and payments at Paxos. Payment side, early 2024. Stablecoins, obviously, Paxos has been doing that for a while, and it's a weird feeling when you're feeling like you're early and you're ahead of you're thinking about where the market's going, and all of a sudden, new administration, genius, acquisition, a freight train. So it must have been crazy for you guys on the inside.
100%. I mean, we basically, I mean, it's just thinking back, like I was sort of describing this to someone the other day where like, I feel like as a founder, I'm like the founder equivalent of like a child of the Great Depression or something like that, because, we started the company in 2022, Terra Luna happened, FTX happened, SVB happened, USDC depeg. And so the first year of our life, we were like, we had this like conviction that stablecoins, should be used for payments, and it made logical sense for them to be used for payments. But there was nothing externally that validated this internal conviction. And so, every customer that came to us for the longest time, we were surprised that they would come to us and want to use our APIs. And it's actually probably been one of like the biggest, mistakes I've made as a founder is like, it's taken me way too long to switch out of that mindset because it's led to me being constantly behind where demand is, is like it's been hard because of this sort of depression mindset. It's been hard to invest ahead of where the market is coming. And so that certainly hit us in 2025. We had no real appreciation for the magnitude of the change that was about to come and the amount of demand that was going to come to our business. Like we saw our inbound funnel grow by many, many, many multiples. there was a period of time where if someone came inbound and filled out a form, it would take like 6 weeks to talk to someone at Bridge, which
Sounds
is like,
terrible.
which is a terrible experience. It's like, especially when we like, and it just like broke my heart for that to happen because we were fighting for every single customer at the beginning. And now to sort of be on the other end of the spectrum where folks are like really trying to talk to us and they can't get us on the phone or sign up or use the product or so on. It was certainly tough.
I totally get it on the kind of scarcity / Great Depression mindset. But stablecoins have been one of the fastest kind of cycles in terms of adoption in the last year. It's like AI and stablecoins, those two things, and they also overlap. And obviously in this letter that came out, agentic commerce was a big piece. Going global was also a big piece. And they kind of fit quite well with where Bridge is today. But how do you see those trends with Bridge in 2025? How much agentic commerce really were you a part of? Are you preparing for? And the same for kind of enabling folks to go global.
Well, I'll take the latter first. On the global side, that has been one of the biggest uses for stablecoins from the very beginning, is folks kind of realized that stablecoins were the first global financial building block. Before stablecoins, you had all these, regional specific money formats and all these regional specific integrations that were required to, store and move money in all of these different countries. And then stablecoins came along and you had this, global building block on top of which you could serve a bunch of people in a bunch of different countries, but also on top of which you could serve people in countries that did not have building blocks before. I think a lot of us in the US or in Europe just, take it for granted that there are all these different, API providers and banking services providers who willingly want to serve startups. But in many markets, there's like one bank or two banks, and they have no interest in seeding potential competitors. And so it's been hard for a lot of the world to get access to to a lot of like the fintech services that have been created in the US or Europe or so on. And so we saw teams across Africa or LATAM or in Asia building on top of our APIs to provide, neo-banking services or saving products or lending products or whatever else in markets that were totally, unserved before, which was really cool and certainly very inspiring. And then on the agentic commerce side, I would say that we saw 2025 was like a year of, planting seeds. And so it probably felt kind of like 2023 in the, stablecoin for payments market, where in 2023, it was a lot of early adopters. We were building a bunch of the infrastructure, but we had some, hints at demand, but, it really took until 2024 for the market to really start to accelerate and there to be like repeatable use cases that we were selling into. And similarly, this year is building a lot of like the APIs and the infrastructure to support some of the agentic use cases that we think are going to be very important in the future. Just this year, we launched like the machine payments APIs, which I'm personally very excited about. It gives like any developer the ability to gate API calls using the X402 protocol. Folks can pay for those with stablecoins. I think that's going to be a really, really big use case, especially as, if you think about what's happening with a lot of the, chat interfaces, consumer, websites are getting disintermediated from the consumer. And when that happens, it's going to force a new business model on the internet. There's just, a lot of the old business model was predicated on a consumer going to a website, the site forming a relationship with that consumer, marketing to that consumer, monetizing that consumer directly, and so on. But now, as they're disintermediated, they will need to monetize the interface through which the consumer is engaging, which is going to be ChatGPT or Claude or whatever else. So we're particularly excited about that, and we think that we're seeing more and more teams start to build on top of our APIs to take advantage of some of those APIs, along with some other agentic payment use cases. And I think this next year we'll start to see some of those use cases really start to scale.
That's awesome. We're going to come on to a lot of that towards the end of the episode, but I just wanted to jump in here quickly and say I fully agree. I've been getting into OpenClaw and all the kind of agentic, I guess, agents, actually personal assistant agents. And once you tap into it, I fully just don't think that people are going to be using regular UIs anymore. Even ChatGPT is definitely one step along the way. But once Google, Apple, and the other kind of broader consumer applications wrap this in, I don't know how long it's going to take. OpenClaw is super early, but maybe a year from now, 2 years from now, it's much easier to just ask your assistant to go get the thing. It just changes the game completely.
100%. I mean, one of the things I'd like to see us do at Stripe is like create a, one of the dynamics with OpenClaw. I'm sure you've experienced this, is like, you set it up and you want to like then enable it to do stuff on your behalf. So then you have to give it a payment instrument. Giving it your own credit card, like you probably don't want to do that. And so what I did is I went and signed up for another credit card another card just specifically for the agent, which then took like a week and like a bunch of time and, what have you. And then I had to put controls on it and blah, blah, blah. And then it could go off and go. But it was like really the only way, because the only way you can really pay on the internet today is with a card. There's no other form of payment that would work in sort of a universally accepted way. And what I would like, if I could like, wish upon a change that Stripe could make, is to basically enable every Stripe interface. Everybody who integrates with Stripe automatically gets a agentic payment flow that is invisible to the user. So it doesn't, right now paying with stablecoins from a consumer standpoint is a pretty niche offering, but, enabling your personal assistant to pay via stablecoins can be totally hidden from the consumer. It can be just a totally behind the scenes means by which these transactions are facilitated. And then I could just give, a stablecoin allowance to this thing and allow it to go off and running. But there is a bit of a chicken and egg issue right now where you need enough of them to have wallets to incentivize folks to accept the payment, or you need folks to enable the payment in order to get people to give stablecoins to their agents. And so we're kind of slowly, facilitating adoption.
But one way to make that happen, and I know I didn't want to take us down a tangent, but now we're on a tangent. The first thing you said, the thing that you wanted to do was to give your agent a card because cards are accepted. We should solve that, and it is almost solved. And the reason I say that is because I'm not sponsored by them or anything like that, but Robinhood card, they've got the gold card, whatever. You can create a virtual card very quickly. And then you can make it one time only. You can put a limit on it. And that's through an app surface. But just as you were speaking, anybody who has a card should just be able to programmatically issue one time or single limit cards. Like that, instead of wasting a week. That's just an idea for anybody who's listening to go take.
Yeah, it's going to be interesting to see who actually does it, because it's far less like imagine like an Amex. Like it's like a whole thing to get another card, an Amex, and you have to pay a fee for it. It is, it's going to be interesting to see who actually adopts it. Brex and Ramp were kind of the first to pioneer this like multi-card limits thing. And now you're like moving into a world where like every household is the equivalent of like a small startup, and could have like, 10 employees with cards that are all facilitating spend and the same controls and so on that existed in a, business type account, which is an interesting world that we would be moving into.
Yeah, it's kind of wild because, the second order effects become like fraud. How do you manage disputes when your agents are starting to make mistakes? There's like friendly fraud. It's a pretty deep rabbit hole. It's interesting because for you guys at Bridge and Stripe, you're planting the seeds for the future. you're also having to build with the existing demand that's right in front of you versus like what's to come as well. Like, and I guess I'm curious, like, you know, I still remember the time when we were walking in San Francisco, you mentioned like the few key principles you cared about at Bridge was developer experience and unit economics. You were like, hey, if we can solve those two things really, really well with stablecoins, like we might be successful. Like, I'm curious, like for you guys, like now that this crazy world of agentic commerce comes in, like what's required of you is going to change. But, you know, have you seen the value proposition evolve? And like, curious your thoughts around that.
I mean, we've already seen one of the interesting things of like being in this stablecoin space over the last like 3 years is that we've seen it change pretty dramatically multiple times already. I mean, when we first started, the only real use case was cross-border payments, and specifically B2B cross-border payments. That was all of our first users were just strictly B2B cross-border flows, mostly LATAM to US. And then about a year after we launched our APIs, we were working with Dollar App, and with Dollar App, we realized that our existing APIs were not really well tuned for what they wanted, and we created a virtual account. And so that was like the first time that this like virtual account product settled into stablecoins had been created. And then that really opened up this whole new opportunity space that now is like, you know, feels like was inevitable and would have existed forever. But it actually took us a whole year before we found our way into this virtual account world. You know, now you've seen like, you know, us and some others have kind of like pushed the card space forward. And that's like a whole new opportunity that is being, because of the global nature of stablecoins, it unlocks cards in a bunch of different countries in a way that really wasn't possible before. You know, we'll get into it probably later, but you know, now with stablecoin issuance, it creates a different world and a whole different competitive field that we move into. And I think the same thing is going to happen with agentic payments. I also think the same thing is happening now that we move into the regulated space, where you know, as the Genius Act passes, and as now that the Genius Act has passed, and once clarity does pass, it is going to create, you know, catalyze a bunch of institutional adoption of stablecoins. And then the competitive space and the market is just going to change, because we're going to go from, you know, serving the early adopters to serving banks. And that's going to materially shift the landscape as well. And so, you know, I think that for us as a business, the most important thing has been to continue to evolve with the market. Like, I very much believe that sort of the ways in which we're making money today will be small relative to ways in which we make money in 5 years. And I think it's going to be, it's incredibly important to us to continue to shift as this market matures and as it changes shape, which it's going to, like, in pretty big ways. I think this bank adoption piece is going to be a really big one. And coming back to your point, I think the agentic payments is going to be another quite material shift.
Yeah, I mean, the whole banking side is like a really interesting value. I mean, maybe you can touch on that a little bit. I mean, you guys obviously just announced like the recent conditional OCC charter as well. You know, you guys have gone down the state by state MTL path for a while now. This obviously changes the whole game for you all. But explain just like the magnitude of that, and then also, like, how do you expect that? You know, how do you expect that business to grow as well?
Yeah, I mean, so we, as soon as Genius passed and it became clear what sort of the enduring regulatory framework for, you know, stablecoin issuers was going to be, which was going to be this sort of OCC regulated national trust bank structure, we immediately set to work to apply and then, you know, subsequently get approved. And we think this is like really important for a bunch of reasons. One is that just simply, like, we think our stablecoin issuance business is going to be really big. And to the extent that it is, we have to have this structure. That there is a ceiling on the amount of stablecoins we can issue via our MTLs. And it's a relatively low ceiling at $10 billion worth of stablecoins. So, in order to become like a material issuer in the future, we need to have this national trust bank. The second thing is that like the market just demands this structure. It provides a bunch of additional protections and a bunch of additional regulatory certainty around how the stablecoins are going to be managed, what's going to happen in the event of a default, how funds are protected between each one of these clients. And so as more and more large scale enterprises adopt stablecoins, their boards, their management teams, their risk teams are going to demand this type of regulatory surety to hold material amounts of deposits in these assets. And then the last bit is that I coming back to this change point is I just think the market is going to continue to evolve, and having more regulatory control over our own destiny gives us more flexibility to make sure that our business can shift and adapt in a way that makes us like optimally responsive to whatever the market demands. And a big part of that is just controlling your destiny from a regulatory perspective. And I think a lot of folks who've been operating in the crypto space have sort of seen what happens when when you don't control your own destiny, which can be tough. The downside of all of this is that it does make it harder to, coming back to your point before, like once you stand up a lot of these like large, once we stand up a bank, you can't be as nimble as you were before because there's more regulatory oversight. There's markets that maybe you could have entered before that you certainly can't enter now. There's risks that you could have taken on, in terms of new products or builds that, that become more expensive to make. So for instance, let's say we wanted to launch a new business via this bank, it might cost 2 or 3x the amount in terms of the overhead to stand it up and get it approved by our regulators and so on versus not. And that's just like a risk that we're willing to take because we do think the market itself is maturing, and this is an entity and a structure that is like certainly required for us to be successful.
Yeah, it's like a relative play, right? As you said, the market demands it. It has become the floor to compete, really, if you want to compete at the top end. As you mentioned, in terms of where the market is going, you've seen the graduation from the specific cross-border flows of B2B to going global across, various different neobanks to big global fintechs that we'll surely talk about later. And then, as you said, banks. Banks are already poking around, and some of them are already launching products, but it's inevitable. And so you take a choice, and I think it's a very clear one. The ROI is there. You're going for the big prize. But it's interesting because it leaves a gap. Once, a very nimble player has, graduated to OCC, all of those products now that are no longer as attractive to you can then be served by maybe a smaller, nimble startup who cannot serve the big customers that you guys are serving, and that's just the way the market goes.
Yeah, I mean that is like the nature of the payments market. Is like you look at Stripe, for instance. Stripe came in with this is just like all of financial services generally, but Stripe in the beginning came in and served a bunch of the startups that were like that nobody viewed it to be like high ROI to serve before. And they figured out a way of serving that market in a way that was much more durable than all the other payments companies. Then as those companies have like scaled and matured, that obviously they've carried Stripe into like the enterprise market, and it's pushed into the enterprise market. We certainly hope that our business, we can continue to be like Stripe broadly, because Stripe has continued to serve startups very well, even though it has been pulled up and has become more highly regulated as it's moved into a bunch of other businesses. And we certainly think there's a lot that we can learn from how they've handled this transition and continue to serve the full spectrum of developers. Because I I don't know if you were implying this, but I certainly believe that, like, if our market is going to continue to evolve, then the most important segments for us to continue to serve are like the dollar apps of whatever this new market is in the future. And at the time, these folks are small startups, but they grow into really big platforms. And these are the folks who show us the future. The enterprises aren't really the ones who show us the future. The enterprises like come and adopt after multiple segments have already proven the use case to be worthwhile. And so you can only be leading in the market if you are serving this like early developer segment and serving them really well.
Yeah, no, that's a really good point, and similar to Stripe's history as well of growing with those customers who ended up being massive customers themselves, and so it kind of is a good kind of connection to the earlier thing that you mentioned, which is the reason why folks require OCC at the top end, but then you also have some of the folks who are startups who want to move very quickly. So maybe could you describe across the customers that you have, what do they say for the reasons why they chose Bridge? Because I'm sure it varies, and everyone will say their own thing. But what have you heard back from them?
Yeah, I mean, I think just one thing before going into that, we're also in like the stablecoin issuance market right now. We're in this very weird phase where everyone is kind of competing on maximal regulation. If you like think about any market that exists, like that is not the spectrum along which competition plays out. It generally plays out along product with regulatory clarity being like a bare minimum to enter. but we're just in this like very bizarro phase right now where the market is super unclear around what is required, and a lot of folks who are coming into the market are risk averse. And so as a result, everybody's selling like, oh, I have this approval, or I have that approval, or I have this structure or that structure, or I have 9,000 regulators who are all overseeing me. And that's kind of like how folks are trying to differentiate, but that will very quickly subside because the regulatory requirements will be solidified over the next year. And then everyone's going to know it'll just be a checkbox. Do you have an OCC regulated national trust bank or not, or some other equivalent structure? If so, great. And then the market will begin to differentiate based on product. But we're still not quite there. But coming back to your question on like why folks have come and built with Bridge. The biggest thing so our business has basically been, really even to today, like almost entirely, maybe like 99% inbound driven. And so why do folks come and build with us? It's because they're coming to our website and they want to sign up and they've heard about Bridge in some capacity. And so why are folks coming to our website? It's because they've heard of someone else building with us and having a really good experience building with Bridge's APIs, or seeing our product in the wild in some capacity with another developer or another product that is inspiring them to adopt. And so, I think it first and foremost comes down to like having a really good developer experience. People can come to us, they can learn about Bridge, they can get access in a day, and they can start building that same day. And we've seen people, take that integration and start moving money within 24, 48 hours, which is pretty amazing. And we've learned a lot of this from Stripe. So much of Stripe's business is driven by their self-serve flow. And we're kind of inching our way into self-serve right now, but we still want to get developers onboarded as quickly as possible and enable them to move funds. The second reason is that what we've seen over time is folks' needs for stablecoins are pretty expansive. So early on, folks just wanted our transfers APIs, which were really used, coming back to that point I made before, for like cross-border B2B payments. But now folks maybe want that. They also want some virtual accounts. Maybe they want to issue a card. Maybe they want a stablecoin. Maybe they want a wallet, or some 1-2 combination of these things. And it is very easy to come to Bridge and just get the spectrum of what you need instead of trying to stitch together 3 or 4 different vendors or what have you. And then The last thing is like, in addition to building with us and having expansive products, is like we still don't meet all the needs of every team. Yeah, like we could probably double or triple our engineering team and still not have enough capacity to meet the breadth of all the requests that are coming in. But we work super closely with every team, large or small, that comes in to understand what it is they need and then build with them. And like, y'all have built products, and used other vendors and stuff. And the most inspiring thing is to work with some other team where you're giving them feedback and then you see the product getting better based on the feedback that you're giving, and on and on and on. And you can see the velocity of improvement. And so, you can project out in a year, this is going to enable me to do a whole bunch of stuff I never dreamed of doing. And we have done that with a bunch of different teams, whether that's like on our FX product side or our cards products or our wallet capabilities or whatever else. And so those are probably like the three big reasons that folks have come and built with us. But it all stems from like really folks having a good experience building with us.
How do you stop yourself from being spread too thin? You mentioned a lot of really good stuff there, and you mentioned also at the beginning how, coming out of the Great Depression kind of mindset of like trying to prepare yourself for what else is possible, and the market is moving so quickly. Like, how do you kind of balance that need for, I think it's known in entrepreneurship, focus, prioritization, and get 2 or 3 things right with, we can get these 10 things done, and we've got 10 different customers pulling us in different directions.
I guess I would personally, in the market that we're in, I would probably never give that like focus advice to like any founder. I am, over the last year, we start off, we had like one business, one product. Now we probably have 5 different businesses that like folks may come in for our FX products, or may come in for our card products, or for our wallet products, or our stablecoin issuance products, or our orchestration products, and then use one or some combination of all of those. And they all kind of compete in slightly different markets with their own competitive sets, both on the traditional financial services side and on the crypto side. And we built all those with a relatively small team over like 2 years. So certainly, wouldn't say that we had focus. I think the biggest advantage for us is that we have just really followed, if you think about building a business as like you're navigating your way through, one of those fog of war games, you can be the one that is like exploring around and trying to remove the fog to reveal the map. But like, if you're the one exploring, you're sort of, there's only like so many bets you can make. For us, the great thing is that since we serve developers, we can enable all of those developers to help us uncover what is out there on the map. And so as long as we enable them to go as far as they can in this world, we can uncover the map really quickly. And so the biggest thing for us has been to make sure that the developers who want to be the most aggressive and explore the frontiers, that we enable them to do that. And as we enable them to do that, we really begin to realize where there are very big and very material opportunities for us to move into. And I think that's why for us, like, I think we've had a disproportionate impact on shaping the stablecoin space, because we've been really good at following these developers and then doubling down to enable the use cases that they have found worked for their audiences, and we are convinced will work for other audiences. And that does mean, making many different bets.
Yeah, it's a really interesting point, because it's like a speed game, but it's also like listening to the market at the same time too. And then I think your point is like really well stated. It's like, are you convinced that we should be building this as well, or are we just like listening to our customers also? It's like a two-way conversation.
Exactly. And the thing is like, just because you've explored some part of the map and you found some area that has like, meaningful amount of resources, doesn't mean that there are other areas out there on the map that are not bigger or more interesting. And we have just maintained this very, even as the market has matured and we've discovered opportunities that have ended up being very large, we still maintain this belief that there are other opportunities out there that will be orders of magnitude larger. It's hard to overstate how early we are in the adoption cycle of stablecoins. And so as a result, it just feels inconceivable to me that we have already, exhausted, the spectrum of opportunities that exist for our business.
Yeah, that's fair. I really like that because when you think about the kind of concept of creating markets, being the first in a market that you created yourself, it's almost an untapped or uncapped kind of size because you're creating in this new category. And so it's a very fast moving place with stablecoins, and now you add AI on top and lots of other things. It does seem kind of, like you said, inconceivable to close the door on those things. But also you have to fund it, you have to hire for it, you need a working protocol of like operations to keep all those things in your head. Just as a founder, how do you kind of manage all that? And is it easier after having been acquired by Stripe? Because you don't need to think about kind of fundraising or anything else like that.
Honestly, I would say that my job has gotten harder post acquisition. I think that most folks probably would anticipate that somehow it becomes easier. I certainly anticipated that it would have become easier. I think there is this law of large numbers thinking that I fell into personally, where Stripe has, I don't know how many employees are at Stripe. Let's say 8,000 people. And we're like 150 people. So surely there are people in that 8,000 who could come over and help our measly group of 150 be successful. But the reality is that Stripe is like running full steam ahead. And so if you go and you talk to any PM or, Eng manager or whatever, and you're like, hey, can I have 3 people from your team? They're like, no. We have like way more to do than we could ever anticipate. So when you go bottoms up, like team by team, what teams feel like they have resources to contribute back to Bridge, like you actually get to like an extremely low number, maybe even rounding to 0 number. and so, the result wasn't that like we were acquired by Stripe and then all of a sudden there was all these people who came over and helped. It's actually, Ben, we were acquired, and then all of a sudden we had all this demand and no additional, not very many additional people, and we also had like increased complexity because we had all this new demand that was coming in. We also have Stripe now as like a large consumer of our APIs. And so the actual, execution of all the things we want to do became more complicated. Over the course of a year, Stripe has certainly, there's been a lot of ways in which, risk and compliance and so on, we've gotten leverage out of the Stripe systems, and we've, engineering too, like a lot of infrastructure engineering, and we've been able to pull the teams closer together. But that was much more of a slow burn relative to like the immediate rush of demand that happened right after the acquisition. And so I would say in like this first year, it certainly made things more complicated. The thing it did change is like it made everything less existential, to your point, Chuk. Like, we didn't need to like go out and raise the next round. We weren't fearful that like, one bad month and the business was going to go crazy or whatever, like you are when you're sort of like strictly independent as like a startup founder. But it did make day-to-day execution meaningfully more complicated.
Yeah, that's awesome.
No, it's not often that you guys, there's just aren't that many patterns to match for this, and so you have to kind of take each one and apply it to your situation. And so I just found it fascinating. And thinking about, you mentioned 5 or so different products that you have, and then earlier we talked about agentic payments and so on. Maybe let's talk through some of those. We've talked about open issuance a little bit, but that seems to be the big game that everyone is deciding to play for obvious reasons. As you said, the ceiling is very, very high, and we're still very, very early. Maybe talk to us a bit about how you are positioning open issuance. On the one hand, it's this really developer-friendly product, but then also it comes with the bells and suspenders of OCC charter.
Yeah, I mean, I think that what we've seen, you see this playing out actually in the AI space right now too. What we have seen in crypto generally, but in our markets, is that as soon as we have experiences. As soon as we have going back to that fog of war analogy, as soon as we have uncovered some area on the map, and then we start building a business there, all of a sudden a bunch of folks pivot and flock and move into that specific area. And that's not unique to us. This happened at Coinbase when I was at Coinbase all the time. As soon as Coinbase launched a product that was successful, a bunch of folks came out and would launch the same thing. Or as soon as Coinbase saw someone else launch a product, it would go and try to, compete and do the same thing like it did with custody and Anchorage and so on. So, we saw that play out with orchestration and, there was this period of time in the orchestration where it was wildly competitive. I mean, we're still kind of there, but now it's a lot harder, maybe even impossible for a new orchestration company to go out and get funded. Because I think, that market is on its way, very early, but on its way to solidifying around like use cases and winners and so on. The same thing is happening right now around stablecoin issuance, where this market, we launched open issuance. We were doing stablecoin issuance for a while, but we launched open issuance at Stripe Tour in New York back in October. And then since then, there's been this like whole rush of like competitive energy in and around that space. And so we're in this early innings where everyone is competing. And the market is just still figuring out along what dimensions it is going, competitive differentiation occurs. And because we're in these early innings, it's super confused. Everyone is pitching their own vision of the world to customers, and customers are trying to make sense of it all. And, in the end of the day, it's this like weird world where a lot of folks are purely focusing on regulatory differentiation, which is a very temporary state of the market. And our view is that, stablecoins are products and they're products that need to be integrated and adopted and accessible to developers. And in order for them to be successful, yes, you need a regulated infrastructure provider to create that stablecoin. But really, in order for it to be successful, you need developers to be able to integrate it. It needs to be able to be integrated deeply into your products. And you need to be able to disseminate it broadly into the DeFi and payments ecosystems. And so, we're investing heavily in those latter bits because we think that over time, that's how this stablecoin issuance market is going to be won or lost. We're building we need this OCC entity and so on, but that's not going to be the differentiation in and of itself. There will be multiple entities who get that same regulatory structure.
Yeah, it's one of 5 products that you guys are managing here at the Bridge side. I mean, yes, there's like a lot of room to be run on the stablecoin issuance side, especially with the regulatory clarity coming as well. Maybe just describe like the stablecoin cards business as well. Like that's something that you guys also launched recently too, and it's really interesting because as you start to introduce customers to the Bridge ecosystem, they may start on orchestration. To your point, they may go to, hey, you know what? I can get better unit economics if I issue a stablecoin. To then like, hey, I want like to earn more unit economics or earn more revenue via interchange. Like maybe just like if you can share a bit more as well, like how in terms of these products stack with each other too.
Yeah, I mean, we'll often have someone like, let's take, Tools for Humanity, WorldCoin, WorldChain, so on. They launched with us. They first launched virtual accounts to enable their global audience to get US and Euro accounts, dollars flow in, settle in stablecoin on WorldChain. Then they now that folks have a bunch of stable coins, they want to, issue cards on top of that. And through that, they can obviously spend those stable coins in a bunch of different countries all around the world. And then they want like FX products, because they don't just want to be able to spend it on a card, but they want to be able to take those and like, pay, friends or deposit money directly into their bank account, whether that bank account's in Mexico or Argentina or wherever else. And, over time, they may also like, a stable coin themselves, so that then they're earning 4% on all those balances, and, they can give better rewards on the card and so on. So all these products, tie very closely together. The card itself stemmed from the same thing I was talking about before, is like we had a bunch of developers who were building with us, and they were, they wanted to use our transfers APIs. They wanted to use our virtual accounts. And then they came to us and they said, hey, we're also, we want cards. We're thinking about using XYZ different provider, but in order to do that, it's a separate integration and a whole nother minimum and a different contract. And like, we don't know how the KYC is going to play together. And so my customers may have to do multiple KYCs and so on. And are you guys launching a card? And so it came directly from demand from customers. And this was maybe like a year and a half, 2 years ago, where we started to see this coming up over and over and over again. And so then we've invested very materially in the card program. And this is an area where, the Stripe integration helps us in a huge way, because Stripe has its own cards program that it has built and scaled up over 7 years, 8 years. They've been investing in card program. Cards are this wildly complicated market, and we've been building it for, a year and a half. And so now we're in the midst of integrating our card program into the Stripe card program in order to accelerate our card capabilities by, 5-6 years, which is going to be really exciting for all the teams who are building on top of us. And we just see this as like a very, very core market, because folks have stablecoins, but they need to be able to spend them. And Chuk, to your point, cards are already accepted all across the internet. It's a very good payment instrument. And so if consumers are going to want to, transact with these stablecoins, it's going to be very important that they're interoperable with the Visa and MasterCard rails that exist today.
Yeah. Yeah, absolutely. And I think the kind of adoption arc that you described is going to be the driver of differentiation of all the various different infrastructure providers. And by that, I mean, you mentioned it earlier, there's just so many things to build still to solve all the various different use cases and all the permutations. It's impossible. You need to scale your team 10x, and those people need to scale their like Claude Code AI's 10x. And so, if you look at a neobank, like you said, hey, I need a virtual bank account and a card so they can spend. And then I want to be able to hold it and earn yield on what I hold, and then make some remittance payments. So small, but to these particular countries, that's already a roadmap. And then that looks slightly different to B2B treasurer who wants a slightly different permutation, to like a large, fintech who wants something else. And so across all these different things, you kind of have to decide that, kind of the skill tree. If you go back to the video game example of like which ones you're going to enable in which order so that you acquire those customers, and then other folks will do other things based on their customers. And, one of the things that I find a weird kind of irony of stablecoins, they're so open and free to build on, but it also makes it really easy for existing fintech companies to build on as well. So like the Revoluts of the world, obviously Stripe have made a play, and so on, can start integrating and incorporating all these different features. And so each firm is going to try and leverage their own existing distribution and just add, is it perp stexes? Is it, prediction markets? Is it their own chain, and so on? And I think that's just the way that the market's going to evolve, and everyone will make their own pattern.
Yeah, I totally agree. I mean, my view is that I think that almost all financial activity will happen via this tokenized layer over time. And it's probably gonna, and the reason why it would happen is purely because it is economical. Like that's kind of like the only belief I have in financial services is that like, economic rationality wins the day. And like, let's take stocks, for instance. If you could own a stock, like a normal stock or a tokenized stock, which one would you prefer to own? Well, you'd probably prefer to own a tokenized stock. At least I would. And the reason being is I get the exact same upside. If the price goes up by $1, my tokenized stock goes up by $1. But then I can also, borrow against it at a rate that's about one half the rate that I could borrow against if it was a real stock, because I can put it into like a DeFi lending pool or whatever else, and I can get, rates that are just materially better versus if I take a loan out from Fidelity where I'm paying 6-7%, the loans that I would get online would be, via a tokenized world would be like 2-3%. Just a very material difference because the risk is very different in a tokenized world versus in the fiat world. And so there's all these benefits that play out as you go to like each layer of the stack, whether it's like tokenized FX or tokenized equities or tokenized money market funds or whatever else. And then as more of this financial activity starts happening on this tokenized layer, obviously stablecoins become the entire settlement infrastructure for all of this activity. And so I'm just like extremely optimistic about where we will get to. And clarity hasn't even passed yet, and so there's all this change that is to come in the space, and we're just I know I've said it a bunch of times, but we're just very much in the early innings of what's gonna happen here.
Yeah, I mean, I've been telling folks that you have to think about stablecoins over the course of 5 years or 10 years. Like, there's still like so much to build here, and the fact of the matter is, you can't cloud code like an OCC chartered bank or a virtual bank account. Like, the fact of the matter is, like, of course, like, agent, coding tools are getting better, but this is a lot of deep stuff that's integrated with bank infrastructure, with like old dated things. And you may have some of these things into your workflow to make it more efficient, but we have like so much to do, and we're like only scratching the surface of like the global TAM of what like capital markets and payment markets look like as well. So it's exciting to see these things play out. And maybe as we're getting close to the end here, Zach, I mean, you've been building Bridge for multiple years now, but what does like success mean to you, like in the next maybe 1 or 5 years, whatever time horizon you feel applicable, to go achieve what this like tokenized economic layer looks like?
Early on with Bridge, we were kind of, maybe there were others, but it certainly feels like we were the only company that was like very seriously investing in stablecoins for, payments use cases. And one of my like learnings from that is like, we invested in this when no one else was. We then enabled some use cases. And I think our business very uniquely catalyzed stablecoins as like a payment instrument. I mean, Circle was not doing this. Coinbase was not doing this. Paxos was not doing this. This is sort of like a market now that like feels inevitable. But I actually don't know how inevitable it would have been if we weren't building, this infrastructure. We had compounded these first use cases. We had raised, this like interesting round from Sequoia. Then we had sold to Stripe, and it kind of like catalyzed the market and made sort of stablecoins as a payment rail become very consensus oriented. And I think there's a bunch of areas in the stablecoin space that we believe it makes all the sense in the world for this opportunity to come to be, but it's not just gonna get built. And I think stablecoin issuance is like a really good example of that, where you have Circle and Tether, who completely dominate the stablecoin ecosystem today. They take all the economics out of this new payment rail and capture them for themselves. And like they're great businesses and they've done amazing work to catalyze the stablecoin market. But in order for stablecoins to realize the fullness of their potential, these economics need to be paid back to end consumers and businesses. And when that happens, you have stablecoins move from like a DeFi trading thing to like a real world use case payment infrastructure rail. And it's very hard to see these existing stablecoins moving into capturing that opportunity or enabling that opportunity to be made, much more economically compelling, given the business models of the existing issuers. And so I think with our issuance business, there's this whole new phase of stablecoins that we hope to catalyze. And so over like the next couple years, I think that, we're in this very unique position where the stablecoin market itself is forming. And we have like a scale and a momentum that enables us to sort of push the space in a way that can maximally benefit end consumers and businesses. And right now it's not on that path. And I hope that like when the book of stablecoins or the book of this market is written, that we have this really outsized role in shaping the way the space evolves so that stablecoins realize the fullness of what could happen. Because it's not just inevitable. Like someone has to build it. Someone has to catalyze these markets. Someone has to like compound the use cases to compel the market to dive in. And I think that if we are not going to do it, no one else will. And so I feel this like very personal responsibility to push as hard as I can to, help stablecoins, realize the fullness of, the opportunity that is ahead.
Yeah, absolutely. I really like that. And I think I've had those thoughts before when thinking about the evolution of any technology, and stablecoins is one of them. Inevitable seems like the case, but it requires individuals and companies and people to actually go make the things happen.
Yeah. I mean, it's not like things don't always just like move forward on the most rational path. I mean, like look at streaming today. We like had cable. We had one thing that we paid for, and it gave us all the things we wanted. And then we thought streaming was going to be this like beautiful world. And now we have like 9 million different streaming services that we all have to pay for, and they all have ads now. And like, it's all crazy. And so just because something is, better technologically doesn't mean that it makes the market better, and doesn't mean that it necessarily makes like consumers on the whole better off. And I think stablecoins, like, I've just seen this with payments over and over again. This is the thing is like very small improvements in accessibility or speed or cost have these long tail impacts on like, consumer or business well-being. And like, take Square where I worked, a while ago, we made it just like a little bit easier to accept card payments. And then it enabled millions of people to create a livelihood that was otherwise not possible because card acceptance was that much easier. And I think stablecoins have the opportunity to do that on this like huge global scale. It makes it easy. You have more economic choice. You can have better financial services. Your financial services can be cheaper. You can borrow at lower rates. I mean, there's all these benefits that can have these long tail impacts for consumers, but those benefits might not come unless somebody builds them and builds the infrastructure that enables folks to take advantage of it.
That's absolutely true. This has been fantastic. Zach, thanks for coming on the show. Where can folks go to learn more about you and Bridge?
Yeah, you could go to Bridge's website. It's just bridge.xyz. And you can follow us on Twitter, which is like @Stablecoin is the Bridge handle, or follow me, which is @ZC Abrams.
Awesome. And you, Raj?
Find me at Parekh on X and then mana.xyz.
And for me, it's stableconblueprint.com and Chuk_XYZ. This has been great. Thanks, Zach.
Yeah, thanks for having me, all. Yeah.
Thanks so much for listening to Money Code. There was so much to take away from today's conversation. I learned a lot, and I hope you did too.
If you enjoyed this episode, do us a favor, share it with someone you know, or give us a 5-star rating on Apple, Spotify, or wherever you get your podcast from. Until next time.